The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes out here, see what comes out of this pile out here today. So this quote is by Chuck Knox. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow Industrials up 192, Nasdaq's up 53, S&Ps are up 23, gold contract down $4.80, trading at $1,214 an ounce. Silver down 6 cents at $16.57 an ounce. Both gold and silver, folks, are down on lighter volume, setting an ABC structure on the way up. Light sweet crude up 70 cents at $48.63. You get the bond market. The ever-ready bond market refuses to back off. We have the 10-year up 2 ticks at 128.13. 30-year is flat at 148.02. And King Dollar, check it out. King Dollar's up 447 ticks at 92.18. The euro is down 47, and the yen's trading up 74 at 119.14. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so if we start with the SPY, folks, what you're going to see is this. The SPY right now is doing a nice little counter-trend bounce. We came down, and when we came down yesterday, you came down with monster volume. We were going into the swing point from December 16th. Yesterday, we came down with 209 million shares. Thus far today, we're going up with 98 million. What is that setting up? That's setting up an ABC structure on the way down. What I expect you're going to see as we come into the close here, the close will be certainly green. You know, bottom line, this is well, it's not that it's a decent bounce. Number-wise, inside the Dow, you get it up $1.90. What you also have, though, is that if we do take a look at this SPY intraday, what you're going to see out here intraday, what I expect you're going to see in the next hour, that is that the SPY itself, we're at 202.17. What I expect you're going to see out here is that this is going to try to get into about the 201.68. So that's about, what is that, 70? That's about 50 cents lower. So that'll end up with about $1.90 up. If we take a look at this future market, folks, what you have inside the futures is this. Bottom line, you come down hard. We had come down with juice. Intraday out here, what we have intraday is that you've done this bounce. You came up to the first expansion on the way up. We got to 2023. That first expansion on the way up tested the high of yesterday at 1020. Bottom line, wasn't a bad test, by the way, either. You know, it was 84,000 inside a continuous contract. Then what you did, and here's the real telltale. What we did at 1410 hours today. At 1410 hours, when we take a look at this baby, what you did is that you basically got down into 2014. That was the first sell down. The second sell down didn't have enough volume. That second sell down was at 1450. What I expect you're going to see out here is that you are going to come into slight selling coming into this close out here. What that's setting up is that's going to set up one beautiful ABC structure on the way down. You get the A to B that it basically is in place right now with some monster volume. The B to C, I expect you're going to be seeing this set up today. What's going to get interesting here is this. Is that how this gets set up, meaning that you can get an ABC structure, and most times, let's say we get an ABC structure. Well, the ABC structure itself, the B to C, okay, is always hard to gauge. It's like, okay, where does the B to C stop? Where does the counter trend bounce stop? In this particular case, what we have, what we're looking at, is that if we take a look at the small caps are screaming out here. The Russell 2000 screaming. That bounce, it just will not get going. You know, the small caps yesterday came down 67 million shares. You're bouncing out there inside the IWM, and it's just anemic. I mean, with 26 million shares. That's pretty intense, folks, when you go from that type of number, meaning the full 67 million on the way down, you only get 27 million on the way back up. Gold contract. We take a look at gold. What we have with gold is this, and this is where it comes back to King Dollar in an incredible way. Gold contract right now. Gold contract right now is trading at 12.15, and what it looks to me is that we have is this. I suspect what you have is an ABC structure in the way up, and it's a beauty, by the way. What we have is that we've been going up with force, coming into the higher swing point that was generated out there on December 9th. That little baby there, we had some nice volume in it up at those highs. Yesterday, we had a great expansion of volume. In correlation to where we're going. Yesterday, we had the volume up there, 190,000 contracts. Today, we've done 107,000, and it refuses to back off. Now, that refuses to back off, folks, in the context that we have a dollar, okay, that literally just not went to the moon, but it is testing and has tested the highs that were generated in 2005. And if you want to see just how crazy this is, we got to 92.51. This is a fast move up there. There's no doubt about it. Right now, it's trading at 92.15. The test is 92.53. That's the exact number that was trading out in 2005. And you know, bottom line, you miss it by, so just so you understand, it's a 0.51 versus a 0.53. You know, so you're talking about 100ths. Yeah, it's a hundredths. It's 2 100ths that it hasn't hit it yet. You know, somehow I suspect we are going to hit it. That correlation, however, and what you can see, which is really wild, is that this market likes a strong dollar, which is just really wild, you know, the whole thing. So what we do look at, okay, is that you have the correlation of the dollar going up with the fact of the matter that gold will not back off. And what does that set up? Guess what? That sets up dollar topping out, gold going higher. That's the way this whole thing is shaking out right now. Our phone number is 877-927-6648. We take a look at the 3 Qs. What we had with the 3 Qs yesterday is this. 3 Qs come down hard yesterday, going into the swing point that was out there from December 16th. 3 Qs right now, just like all the rest of the indices, are bouncing on dramatically lighter volume. 3 Qs today have done 30 million shares. You're up $1.05. We came down out here with 66 million shares. So it's a big number, and I expect what you're going to see. If we get a sell-off, and that sell-off, it doesn't have to be much coming into this close, folks. All this has to be, you know, and it's starting right now. The Dow's at 164, up 164. We've had it up of over 220. You only need basically another on the S&P. So on the S&P, The cash S&P were 2022. You get the cash S&P down at about 2017, which I expect we're going to see coming into that close. What you're going to see then is that this is a very large ABC structure on the way down. Our phone number is 877-927-6648. The Fed. So we had the Fed come out with their minutes out here today, folks, and this is how the Fed minutes were shaken out. The Federal Reserve confirmed that being patient on interest rates means no increase before late April. Bottom line, they're kidding themselves, folks, okay, because the bottom line, the rates are going down, not up. The 10-year and the 30-year screaming that we have rates that are going down, bond prices that are going up. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials up 180, NASDAQ up 49, S&Ps are up 19, all with light volume, by the way, folks. It's going to be a really fun watching how this comes into the close, because the market doesn't have to sell off much to set up that nice C point of an ABC structure on the way down. And, you know, when we're talking about ABC structures or Gartley's or price and volume and all of the above, we have a special going on. Now, we just launched this today. And this is what it is. As you come over to TFNN, you can test drive my daily newsletter, Market Insights, 1 month absolutely free. Normally it's 2 weeks, but you can do it for a month. What you get with that is this, folks. You will get a actual copy of the book, The Art of Time in the Trade, which is an $88 value. What you're also going to get is that I'm going to be doing a workshop. That workshop is going to be 2 weeks from now. The workshop is going to be on the year to come. And what I'm going to be talking about specifically, I'm going to be talking about where I expect the S&P to be, the bonds to be, and gold to be. And what I'm going to do here is that give you specifics that at those swing points, what has to happen for them to go either lower and or higher. So if you want to take advantage of the newsletter for a full month, and if you can cancel, it's free. You can cancel it in a month, you keep the book, you go to the workshop, all of the above. Check it out on the front page of TFNN. We've basically never done this. Bottom line, nice deal. Let's go to Susan in Windsor, Ontario. Hey, Susan, what's going on?
Hello.
How are you?
Good. Looking into getting into gold. I got stopped out, GDX.
Okay.
And somehow it was just running up, didn't let me get in. So I was just wondering, do I chase it, or is there a little pause coming up? How do you see it?
So the GDX, folks, is the Market Vectors Gold Miner Trust. The low 16, the highs 28. Is there some reason that you like the GDX versus like individual equities? What's the story on that?
I really don't know which one to pick. There are so many that I thought this was, like a basket of...
Okay, so it is a basket. So what you have here, folks, is that inside the GDX, the largest weighting structure is Gold Corp. Gold Corp's now 9.7%. You get Barrick, 7.5, Newmont's 5.9, Rheingold is 5.1. The reason I asked Suzanne, is that inside that basket, you have 13%. Barrick and Newmont are basically dogs. But anyway, that being said and done, the tough part right here is that when you say you got stopped out, is that a long time ago? Because the GDX has just run from like $17 to 21.
Yeah, I got stopped out at 17-something, and then I
see. Okay.
Never got in.
Okay.
It was one day I had a chance, and then it just kept running.
Right. This is a tough one. The reason it's a tough one, folks, is this. My take on gold right now is that I expect probably tomorrow or the next day you're going to get a breakout here on the GDX, meaning it's going to get over the $20 mark and wants to run to somewhere around 24, 24.50. The key, well, and what I mean by it, it's tough right here because it's like a money management deal, because you just did go up from 17 to 21, which is huge for a $17 stock, right? If you got in it, what you'd have to do is that you'd put a stop under the low of yesterday. That would be one way you could do it. Oh, excuse me, sorry.
Bless you.
Thank you very much. You can put a stop under 1954, and you're not giving it much space there, which is okay, because the way this is set up right now, the bottom of that range, when you go back to the November 5th level, November 5th, what you have there, the bottom of that range is $16. The top is 42. I mean, is 20, and what that sets up is about a 24 price point if in fact we break topside. See, yesterday what you had is this. We're pushing into the swing point from the 26th of November, and you're pushing it with volume. So that says it wants to go. Yeah.
Thank you.
Okay. Have a great one. Have a safe one. 877-927-6648. Let's go over and take a look at that oil market, folks, okay? What we have with oil continues to go lower. Today it's up all of 66 cents, which is just pretty wild because the headlines everywhere that oil is up. Guess what, folks? What the oil market has done is it have gone to a lower low with more volume. We've done 451,000 contracts in the futures market. That hit a low out there of 46.83 today. So what that sets up is that's going to set up a test of at least that low, number one. And I expect with the type of volume you have there, you know, this move's not done. It's just not done. You know, if we go take a look at the XLE, the oil, gas, and service sector, what you're going to see is that the XLE, now this is so dangerous, it's unbelievable. And what it is this. The XLE, folks, you know, yesterday it came down to a price point of 74.59. What you have out here is that you're building cause. Now the cause this is building, you know, you get a sideways move out here. Today you're up 3 pennies. You have 27 million shares. It tried to get to a higher price. It tried to get up to 76. Well, it did get to 76.36. Couldn't handle higher price. It's going sideways. That is building cause to get into that swing low out there of 72.51. And it's real possible that there's an additional ABC structure on the way down. We go into the financials because what we did have yesterday is that the financials, what basically came down yesterday, came down with volume. This is the XLF. XLF out here, when we came down yesterday, it came down with we came down with 46 million shares. Today you're up on 18 million. That's about as cool as you can get, folks, okay? Meaning that's a number that wants lower price. As we were talking right before the break, the Fed minutes did come out. And what you have with the Fed minutes, folks, is this. You know, they were talking about that, okay, they're not going to raise rates before late April. But before late April, folks, it's January right now. The 10-year right now is trading out. It's at 1.9. What that sets up, bottom line, is, number one, the 10-year wants higher price, lower yield. It has all the makings of an additional ABC structure on the way up. The 30-year absolutely blew away its highs with volume. So the 30-year is basically generating, saying, the 30-year right now is trading at 148 and 3 ticks. It did 393,000 contracts today. Yesterday it did 576. This 30-year is going to the moon. You know, the next move for the 30-year is 153. It's a big number. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are up 192. Nasdaq's up 52. S&Ps are up 22. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials right now up 189. NASDAQ is up 51. S&Ps are up 22. You get gold down 560. Bonds, you get the 10-year up 3 ticks. 30-year flat at 148. And as we do each and every Wednesday at 30 past the first hour, we get our man, Mr. John Logan. And don't forget, folks, John kicks us off every trading day right here at TFNN, 8 to 9 Eastern Standard Time. Outstanding show. And if you would like to test drive the Taz Market Scanner, it's an awesome software tool. He uses it out there each and every trading day. Come over to our website at TFNN. You're going to see it right on the front page. You can test drive that absolutely free 1 full month. John Logan, what's going on?
Hey, Tom O'Brien, good to be back with you.
You too, man.
It's cold. It's cold up here in North Carolina.
Is it? Yesterday, and I'm sure you were getting them this morning too. We were getting calls in from Boston yesterday, and they were saying just how cold it was getting. And we got a little bit this morning.
Yeah. That's amazing down there in the Gulf like yours. But it's supposed to be 13 tonight here. So
13.
Yeah. That's very
cold.
Uncommon.
Yeah, that's really cold.
Yeah. So we'll be using some natural gas, so to speak. And, and my goodness, that thing has imploded lately, huh?
There's no doubt, man. And what's going to get interesting here, of course, that oil market has just got absolutely smoked with it being so cold today, folks. Okay, you still have the NG contract down 1.2% at 289. That's pretty intense, man.
Yeah, I've been watching that. I've been watching Andy's show, Andy Hecht, who's a commodity guru.
Sure.
And it's been amazing to watch that thing fall apart. But we've been watching crude oil too, just because kind of the topic of seems like the winter here.
Right.
And we had in 3 days we had a 15% downturn in that product, off of a huge pullback from 100 already on the $100 barrel down into 55.
Right.
In a couple of days, we did a free video for you where we were talking about even still selling the 55 area, and that I haven't seen any technical. People are out there wondering whether they should just try to step in and buy oil. I felt the same way in 2008 and started buying it in the 40s, and it went into the 30s.
Okay.
So you got to be, you got to be wary of going in and kind of getting your toe wet on stuff like that. I really we talked about this morning on the show that sometimes enough's enough for a while at least.
Yes.
And so we've got some of our automated strategies that work that way too. We have monetary targets in sometimes, like if we make a certain percent move, then we know over history that's probably not a bad thing to do. Sometimes take some off the table.
Right.
And I feel that way a little bit with crude oil right now. But there's really I just want your listeners to hear this. There's really not a lot of technical reasons out there at this stage that this is turning around at all. And things on their lows go lower. We talk about that all the time.
Sure. And
things on their highs go higher. And this is one of those cases where there's no bottom base down here in my opinion yet. So for guys out there trying to look at this as crude oil's on sale, I don't know if that's the case yet.
Well, and folks, what you're hearing is this. Andy and I were talking about this yesterday, and you probably heard it because I heard you this morning too. Yeah. And then I was listening to Lloyd Blankfield, the CEO of Goldman, folks, was on CNBC this morning, and the bottom line is that they were asking him a lot of different questions. One of the great questions I thought was just in the oil market, how low it can go. Now, when he's out on TV, folks, they don't push the deal that how this guy started. But the bottom line is that Goldman Sachs had bought another firm that was a huge commodity firm, and Blankfield comes from the commodity business. Huge gold trader. I don't know how much he traded oil, and just as what John just said, that's what Blankfield is saying. Saying, hey, man, this can go to $30 in a heartbeat. And they're looking at him like, what? Because that's the last thing they thought they'd hear out of a CEO of Goldman. Do you know what I mean? And I don't know if they knew that Goldman had bought that firm. Do you know what I mean? He's really a futures trader. That's what he is. Right. And if you're a commodities trader, folks, you know that's how commodities go, which is crazy. But guess what? That's.
Yeah, if you've been banging your head on the wall for a while trading commodities for a couple of decades, like you and I, you've seen it all. And this is not out of the realm of reality for this to go lower. And I'm not jumping on the bandwagon late you and I have been talking about crude oil going down since 100.
Yeah, no, listen. You know what he did bring up also, though. Just so he did bring up that Goldman is still doing God's work, and so all's great in the world, folks.
Oh my goodness! The only other thing that is the contrarian indicator for this is now Kramer has jumped on the bandwagon saying oil's going to go lower, and that I gotta step back and think about that one now.
There's no doubt.
Yeah.
There's no doubt. But there's still, and what we're talking about is the contrary deal here, folks.
Yeah.
Because what you do have, which is really dynamite. I mean, well, depending on where you stand, it's dynamite that everyone thinks that yes, it's going to come back immediately. Hey, check this out, John. This is sick. And check this out, folks. Okay.
I'm ready.
So picture, you have oil at these lows, right? And when Andy Hall, who's probably the most famous oil trader, has probably made the most amount of money trading oil that at least that we know about, right? It's hundreds of millions of dollars. He's been accumulating, good positions, and he's a trader, folks, and I'm sure he's fine. No one has to worry about Andy Hall. But so as I go back a few months, John, I'm saying to myself, okay, man, I'm going to get ready when this thing gets low, and I want to start accumulating, some contracts.
Yeah.
And as I'm doing this, I'm even saying, and what I'm talking here, folks, I'm talking about a contrarian deal, just talking to yourself, okay? So I'm thinking this through, almost every day. I get out of work, thinking of truth, saying, man, okay, so where am I going to start? Then I start saying to myself, you know what, man? Not only can oil go lower, but guess what, folks? Oil just might not go back to 70, 60. And what cemented this for me today was I says, okay, I'm not going to do it, was this. Bob Pisani was on CNBC. He's always on, okay, but he was doing statistics that the last 5 times that oil went down 59% or 50%, right? It was up 59% within the next 4 months. And I says, that's it. That's 100%. That's it. I'm not doing it.
Exactly.
Isn't that funny, though?
Exactly. Yeah. No, and what you're saying, for somebody that hadn't got it yet, is when so many people start displaying facts like that,
yeah,
it's something. A lot of times it doesn't come true. It's like the average doesn't work out after a while.
No, it doesn't. Yeah. It doesn't. Hey, talk to me about the TAS software. First off, it's outstanding software, and the breadth. Because right now, folks, see, we have such a highly volatile market. It's so cool. Inside the software, John has these breadth analyzers, and they're so cool because this is when you want to know even intraday. Daily, do the breadth change, and where is the breadth at this particular point, John?
Yeah, what Tom is referring to is, or what you're referring to, while I'm using the word Tom, what you're referring to is we take a kind of a summary outlook on the internals of the S&P 500, as well as the Shanghai, as well as the Euro Stoxx 50, as well as a couple of Singapore, Thailand, Hong Kong, but the S&P 500, what we kind of calculate as the breadth is, and which is really has nothing to do with, the normal breadth is, 17 NASDAQ stocks were down today and 83 were up, and
sure,
the breadth was positive or whatever. What we look at it a little bit deeper concept, whether stocks in general of the internals of the S&P, each S&P 500 stock individually, whether those individual stocks are either balanced or imbalanced. And what does that mean? That means that are they in a fair auction market environment in those balanced areas, those meaty parts of the bell curve where they actually should be, or are they outside those high statistical probability areas? And if they are outside those high probability areas, are they on the upside or the downside?
Yes.
And as we look at that in the summary view, we can then determine breadth, as in long-term breadth. Are we imbalanced on the upside, imbalanced on the downside, or are we balanced? Or on the shorter-term views, the intermediate, we call it the daily, the 240, the 60 down the line, where does that breadth change? And what we've noticed doing our back testing over the years, before we came out with this, and actually you were the one that really caused me to have a dream to even create this, when we were looking at the S&Ps this summer going, this is not right.
Yeah.
I mean, the stocks are trading below balance and
right,
and all those things. And so we came out with this. We did our back testing, and we've noticed that our weekly crossovers over the since 2003, these things have actually been profitable 95% of the time. And I hate to, kind of beat our chest about it, but we're going to take that for what it's worth and say, we've got to try to eliminate one side of the marketplace,
right?
The long or short side, when we're seeing that happen.
Yeah.
So,
hey, can you hang on?
Yeah, absolutely.
It's a beautiful thing, man. You stay right there, folks. And don't forget, folks, John kicks us off every trading day, 8 o'clock in the morning. We go live 8 o'clock in the morning, 6 o'clock at night. You stay right there. We're going to be coming right back. Now, all that programming, too, you get right on your cell phone. TFNN.mobi. John and I are coming right back with you, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow Industrials up 205, Nasdaq's up 53, S&Ps are up 23. We're talking about our man, Mr. John Logan. We're talking the markets in particular, and we're talking right now the TAS market profile and how the breadth statistics, what exactly are in them when this breadth either goes positive and or negative on a daily, weekly, monthly, or intraday basis, folks.
Yeah, well, I hate to be long-winded. I was just trying to get a little format of the situation.
No, it's perfect, man.
So as we talked about, these are the internals, and whether the internals are imbalanced or balanced on the long term or intermediate or short term.
Right.
And on the scanner, I'm not showing it right now, but on the scanner, we've got basically these kind of TAS speedometers, if you will, that show you whether breadth is positive or negative based around that concept.
Right.
And based around the crossovers of when those breadths as a whole turn from negative to positive, positive, negative. So as we look at those, just to give us some specific dates, I mean, like recently we had our intermediate breadth change a little bit late, actually, around the 2030 area. And I know we came off a little bit since then, but the long-term trend, really, when you look at the breadth, is still positive.
Okay.
And we've paid attention to that for a long time, and we've been able to buy dips based on that. But as the intermediate has kind of turned negative, it provides trading opportunities within that. A lot of, I personally don't want to hang on to 100-point S&P pullbacks, if you know what I mean. So we've got opportunities in the interim, really, to kind of use breadth either to stop you out to some degree for a while, at least in some of those kind of long-term holdings, or provide some trading opportunities on the short side or the long side based on some intermediate swings in breadth. And this thing has in the past has really forecasted some great moves, i.e. that one time back, or not one time, but one of the times back in July, we were talking, we had a 100-point sell-off. The breadth had turned negative ahead of time on the long term, and then recently, we had this 200-point sell-off where we back in when was that? October, November? I can't remember.
It started December 5th, and then the S&P up there, folks, was at 2075, and we dove down in 1972.
Okay, yeah, and we had a 200-point pullback even before then, not too long ago. But breadth really kind of gives us, it gives you one specific concept above anything else to me, and that is it okay to be long and not okay to be short, or okay to be short and not okay to be long? And that really eliminates, as a trader, it eliminates that guesswork, like whether you're supposed to be buying support or selling resistance. And that's it. And if I can go to sleep at night knowing that I at least have that on my side, it makes waking up and trading every day or looking at the markets, it makes it a little bit more simple to me. And that's kind of the coolest thing about the breadth part of it. Now, the scanner itself is a filtering mechanism to basically use those internals to figure out what's acting the way that you want to see, either relative strength trades, stocks that are holding up relative to profiles, stocks that are kind of in ranges that maybe you can take some trading opportunities around those ranges. It does, the scanner does two things. It's the breadth calculation and the filtering aspect of it. And we could make it two products, but we decided to put it into one product. And TFNN users have actually got access to both of those features.
Yeah.
So.
And folks, you can test drive it right by coming over to our website at TFNN. Hey, listen, so when are you going to come visit? It's getting cold up there, man.
Considering that it'll be 13, and today, you're getting votes to come down there pretty quickly.
It's wide open, man. It's amazing, folks, is that we woke up this morning, it was 55, and it's nice now. It's like 63 or something, 64. But we know that when we wake up at 55, particularly, we know that how cold it is up north, because realistically, right around now, it's like 65, 70 every day.
Oh my God!
And Z and Philly saying it's -5. Boston, Mitch, it's 22. That's cold, because that's a damp cold. There's no doubt about it, man.
That's crazy. What, you want to keep chatting here?
Yeah.
A lot of guys that are probably looking at some of the things that I talk about every day, or the other hosts. The Shanghai. I don't know if you've been talking about that at all.
No, I haven't, but go ahead. I got it up right now.
Yeah, a lot of people are not looking at Chinese-related stocks. A lot of times they're considering that the Chinese economy is slowing down to 7%.
And the Shanghai just went from 2,300 to 3,300, folks.
Yeah, and this is something I'm keeping my eye on. I mean,
wow.
We've got the breadth on the Shanghai. It's ultra super positive still, by the way.
That's amazing.
So that means we are buying pullbacks on this, and we've been buying pullbacks recently around 29.20. It hit it almost to the tick, and then we had the breakout above recently 31.59. But this is something. Start looking. At this, because if the breadth starts turning negative on this, especially ahead of time, and you've got, if everybody can get a trial of the scanner, they can see that.
Yes.
This may be something to really pick some points off of, because
it is.
This has kind of gone a long ways pretty quick.
And if you want to see something that's amazing, folks, so check this out. So you have a high swing point in August of 2009. That swing point, folks, is at 34.78. That had 283 billion shares, right? Well, guess what? Last month we did oh my God, can't even count that high. It blew it away. That's the bottom line. And it's going to be interesting. If it blows away, folks, the 34.78, then the high's the game, because this was a rocket ship on the way up, and it was the death trap on the way down. The Shanghai had gone from 6,100 straight down to 1,600.
Yeah, it crushed some people over in Asia where I'm at. I mean, they basically have never traded the stock since then.
Yeah, I can see that. There's no doubt. That's cool. Man, this is a wild move, though. You know what's cool about this, John? That we'll have to watch like a hawk. They claim that China is slowing down so dramatically, but that would say to me that, hey, guess what? We'll watch that copper. We'll watch the commodities in general, because the bottom line is, to me. That move last month, folks, was real, because it had the volume behind the move, man. It's a big move. It's pretty cool.
They're talking about some of the things with the yuan, or the Chinese currency.
Yes.
And being able to, kind of, I guess, release it a little bit for more open market type activity.
Yeah.
Got to keep your eye on that. I think this particular product's really going to be in play. If you like volatility, this is we had a 10% range the other day in this index, if you can believe that. So that will be the equivalent of having the S&P go from have a 200-point range in one day.
Wow.
Back and forth, yeah.
We haven't had that since 2008.
Good talking to you again.
You too, man. Have a great one. Have a safe one. You stay right there, folks. We'll be coming back. Dow Industrials right now are up 205. Nasdaq's up 55. S&Ps are up 24. You got gold down $7 at 12.12. Silver's off 8 cents at 16.55. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. So it's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone have a great day, safe day. Let's make it a great night, folks. This is a quote by Peter Ustinov. The point of living is to believe the best is yet to come. Market-wise, let's take a look at it out here. We had the Dow Industrials up 212, NASDAQ up 57, S&P's up 23, all with light volume, by the way. Gold contract down $6.20. That backed off with light volume. That's an ABC structure on the way up. Silver down 8 cents at $16.55. Oil up 51 cents with light volume. Oil wants lower price. Oil actually hit a lower low, folks, with heavier volume today. We're at 48.50. Oil looks like $32, man, is game, which is going to be just crazy, but that's game. Bond market. 10-year up 2 ticks at 124.14. The 30-year down 3 ticks at 148.02. Both the 10-year and the 30-year, one higher price. They took out their swings. Well, the 30-year took out its swing with volume. 10-year still going after that October 15th swing. King dollar up 477 ticks at 92.21. What King dollar has done is this. King dollar got into the, well, actually it's 2 100ths away from hitting the high of 2005. We'll see whether that's the end of the move for King dollar. King dollar's been on the move in an incredible way. There's no doubt about that. And so what you have is this, is that the 2005 high, folks, is a 100% mover, move number one. The reason that I'm suspecting that we're going to get a pullback in the dollar is this, is that the gold market, okay, refuses to back off. And that is very unusual because why? Because gold is priced in dollars. The way gold has set up out here right now is that it's done a small ABC structure on the way up. You have the low out here of 1181 as your A point. Your B point is up there at the 1223. So it's $40. Your C very well could have been today. If the C is out here today, you're talking about a 1250 ABC structure on the way up, which would totally make sense. Why? Because when you go back to the October swing high, that's 12. The high of that is 1256. The low of that is 1247. That's the way this baby is looking for me right now. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So if we use the SPY, folks, what you're going to see is this. SPY today does a nice bounce. The indice itself, yesterday we came down with 942 million shares. We go up today with 777 million shares. Inside the SPY, what you have is that yesterday we had come down with 209 million shares. You know, you got to a low out here of 198.86. Today, you go up with 119 million shares. You can see that correlation is pretty intense. You know, we're talking almost, you go up in, what, 40% lighter volume. So the real key is going to be, okay, can you get another pop-up into the 204 area? We'll find out. We go take a look at the, and this, of course, folks, was across all the indices. If we go take a look at the NDX 100 and we use the 3 Qs for that, what you're going to see is this. 3Qs yesterday came down at 66 million shares. You get to a price point of 99.62. We go up today on 35 million. The 3Qs building cause to take out the December 16th swing low. The big number, though, folks, is that October 15th swing low out there at 91.79. The weakest indice out here on this bounce today was the Russell 2000. The IWM, you talk about anemic, it was about as anemic as you could get. The IWM was up $1.42, and we're at 116.73. The IWM yesterday got into a low of 114.36. We did that with 67 million shares. Today you bounce with 31 million. IWM is building cause to basically blow away the 113.39, which was the December 16th swing point. What I expect you're going to see here, which is game, is the 106.61. Now, what we don't do a lot, we might as well go right over to the diamonds, though. You might as well, we'll do all of these. Diamonds, pretty clear. Also, what happened there, the diamonds, of course, a representative of the Dow Industrials. The diamonds yesterday had come down with 10 million shares. You got into a low of 174.24. And we go up today with 5.3 million shares. Those stats, folks, straight out, are telling you that there's no demand, and you're talking people want to get out of the market, and they want to get out of the market as fast as they can. And the door's never opened, never big enough when folks want to get out of the market. We take a look at the 10-year bond. 10-year bond continues to want higher price. This bond market has been screaming for quite a while that the S&P wants lower price, bonds want higher price. So what do we have inside the bond market? Bond market yesterday went up on 1.7 million contracts, which is just insane. That's a big number, folks, okay? Today, we go sideways with 1.3. So the bond market right now, the high of the October 15th swing up there is 129.28. Yesterday, we got to a price point of 129.03. That's building cause to blow away that swing point. Now, the 30-year has already done that. The 30-year basically took the October 15th swing point and took it apart. We're way over the swing point right now. The high of October 15th was 146.16. The 30-year right now is at 148.03. We had, let's see, yesterday we had done 576,000 contracts, and today you go sideways with 402. That also, right now, the 30-year is set up that it wants to run into the 153 area. Huge, huge number. We already had done gold. If we go take a look at silver, what you're going to see with silver. Now, silver needs help, but what silver has done, and silver got it going yesterday, what we have had got done in silver is this. Silver is trading at $16.55. You're not in the larger range yet. Silver has to get back inside $16.71 in order to do that. But what we did have is this. Silver yesterday had a small amount of volume, 43,000 contracts. Today what you did is that you went sideways with 32,000. Silver really has to get up and break this 1735 in order to prove that that does want higher price. King dollar. Now, this is the number. King dollar is just pretty amazing, actually. King dollar out here today, we missed the high of 2005, and we've missed that by two ticks. We hit 91.510 today. It's 91.530, so it's actually 20 ticks. Bottom line, I expect you're going to hit it, number one. But as I said a little bit earlier, when you do look at the aspect of how gold is trading, and it's continued to trade, folks. This just wasn't the last few days. if you go over to the XAU, watch, let's do the XAU and the HUI. The XAU and the HUI have both been building cars for a higher price. And their bottom line is that they're really proving themselves that they want higher price. And it looks to me that the base that they've built is pretty incredible to launch this base. What we had out here yesterday, if we take a look at the HUI, is this. You're coming up into the swing points that were generated the last couple months. And we had the last time we were up at 181, and the XAU, you did 30 million shares. We were pushing yesterday, folks, into the swing point with 27 million shares. That's a good situation. It'd be better or more, but bottom line, you are pushing into that swing point with slightly expanded volume. The rest of the days we've been doing 20 million. As we got up there, you're pushing 27 million. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of TFNN, folks, okay, if you come over to our website at TFNN, what you're going to see right in the front page is this. I specifically am doing a special. And what the special is this. You can test drive my daily newsletter, Market Insights. Normally, the test drive is for 2 weeks. This is going to be, you can test drive it for a full month. Along with the test drive, you will get a copy of my book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. What you will also get is that I'm going to be doing a workshop for subscribers, and that workshop is on January 21st. Inside the workshop, what I'm going to be talking about is the bond market, the S&P, and the gold market. What I'm going to give you, parameters as to, well, first off, I'll give you my view as to where I think they're going and why they think they're going. What you're also going to get, though, is you're going to get a set of slides specifically relating to why I think they're going there, so that when you see whether they are hitting swing points, whether you get the volume, you don't get the volume, all of the above. You'll see whether it's going to be a failure at those particular swing points, or, in fact, they'll basically take those swing points out with volume. You can check it out on the front page of TFNN. The special is good for 2 weeks, so you absolutely have zero risk. That's the bottom line. You can cancel the newsletter in a month. Well, first off, you don't get charged. You will have to give us a credit card, but you don't get charged. You cancel it in a month. You get to keep the book no matter what happens. You get to go to the news, go to the webinar. So check it out on the front page of TFNN. And with the volatility here, this is a great time to test drive the newsletter. Let's go to John in Winchester. Hey, John, what's going on?
Hi, Tom. I'm freezing.
Freezing. You know what's so funny? I was thinking of you last night, man, because you were telling me that it was 17. It was going to go down to, what, 11 last night, right?
I think it went even further than 11 with the wind chill.
That's intense, man.
Right now it's 18.
That's cold. That's cold in Boston for the afternoon. Hey, is it? Let's see. What time is it? Dark yet up there?
It's about 4:20. It's starting to get dark now. Yep.
Okay. Wow. Well, listen, man. I appreciate your call and appreciate you holding. We got to keep.
Hey, no
we
problem.
got to keep you warm. So, what are we going to look at today?
Well, give me some good picks, and I'll be able to come down there. But
okay, good.
I was looking at Skyworks.
Okay, let's take a look. Skyworks, a semiconductor company. They design, manufacture radio frequencies and complete semiconductor systems. The low is 27. The high is 74. Okay, so I can see what you're looking at here. So what you have with Skyworks is this, folks, okay? And I suspect he's looking to go short this market. And what you have is this, is that the last time Skyworks had a volume on the way up, it was $66, and that was on, November 4th. So that high there, I see what it did too. Oh, interesting, man. So see what it did yesterday. Yesterday it came down to 68. You do it with 4.7 million shares. You go up today with 2.8. Now the real question is that where would the short position be? Right there. Okay, so I wouldn't do it yet. I mean, what you'd like to see is 73.40. Where I'm going with this is that on December 28th, the high of that bar there, John, that would be the place if you wanted to get a short position on. Because what you do then is that you can put your stop right on the other side of it. You don't need, well, let's see, 74.97. You don't even have to go to the highs, because if it goes to the highs, it can get higher. You know, I'd wait for it to get up to that level, though.
74, okay. And I got a quick question. Caller called in with RAX a couple of weeks ago.
RAX.
And I'm still trying to get into the engulfing candles and the Fibonacci's, and, you know, from reading the book and everything, trying to get back into the game.
Okay.
Did Rax make an engulfing candle today?
So what the question would be, folks, is that you had Rax go from a price point today of $47.88 to $46.18, and boy, this gets wild. So watch what you have. So an engulfing candle, a bearish engulfing, that is, would be opening at a high, you're closing at a low, and you're taking out a bunch of other trading days. This would be a small one. Even though the price spread, John, was so big today, what you have is this. It didn't get to the high, number one, which is that 48 level.
Yeah.
Okay? So when you don't get to the high like that, it's like, okay, you know, you got into a range. So it did engulf 4 days. What you like to see with an engulfing candle, right? You would, if this got to the high, and then, you know, then you would have basically engulfed all the way back to December 5th. That would have been action, man.
Okay.
That's what you're looking for. Hey, did you end up trading SanDisk?
You know, there was another question I had. That thing's driving me nuts. Actually driving my girlfriend nuts. It goes down a couple of points, then it comes all the way back up, and then it goes back down again.
But it gave it up. Yeah, it's continuing to give it up. What you have with SanDisk, and now I'm short SanDisk, folks, okay? But what you have with SanDisk is that SanDisk actually got to a lower low today, had an expansion at volume, you know. But don't do it now. The money management just isn't there right now. But anyway, that's what you want to be looking at. So they say, so when this was going up, so intraday, what you had, folks, is this: is that intraday yesterday it tried to get to a higher high, couldn't handle it. You got to it couldn't even get over the high from the day before. It went to 97.32. Today it just didn't have anything. And what you had, the reason for that, one of the reasons, is that Micron Tech come out with its numbers, and Micron gapped lower, took out its gap, took out its lower swing, took it out with volume. And that's an indication that bottom line did 52 million shares, and Micron Tech blew away its 37 swing point. That only had 27 million shares. So Micron now is on its way down to that $26.32 low.
You figure Texas Instruments would have went down with it, but that thing went up like I think $1 today. So
let's take a look.
Doesn't make any sense.
Oh, yeah, well, that's the market for you, man. TXN.
That'd be crazy.
Let's see. 1 second. TXN. So you got Texas Instruments. That's, yeah, you're up 93 cents. That still wants to go, that wants to get out of the October 15th swing low, though, too. You got a little bounce going here. That's it. But Texas Instruments, I wouldn't short that until you're at 52.47, 54.02. And where I'm going with that, John, is that's the low of December 19th. That would be the number. That's where you want to be.
54.07.
Yep.
Thank you, Tom. Appreciate your help.
Okay, man. Have a great one. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. You want to test drive the Market Insights for 1 month? Get a free book. Get the free webinar. Check it out on the front page of TFNN. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 210, NASDAQ up 57, S&P's up 23. Let's go to Jim in Ipswich. Hey, Jim, what's going on?
No, it's Tom. How you doing, buddy?
I'm doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
Yeah, no problem. Hey, I've had Merrimack Pharmaceuticals for about 8 or 9 months, and it's had a good run. I'm thinking of taking half off the table and letting the rest ride.
Okay, so let's take a look at it. The symbol, folks, is MACK. It's a biotech company, and he's from Ipswich, and this is right at Cambridge, Mass. Do you work for them?
No, I don't. No, not at all. I know of them.
Yeah.
I'm a finance guy, but I read the papers and read a lot. So
sure. So let's take a look at it. So, even the last, this baby has had, no doubt, a nice run, folks, okay? And the last time that we had any juice on the way up, the real juice came at $8.41, which was September 21st. That was basically a nice expansion on the way up. After that, what you had is that the next one wasn't bad. It was December 19th. So let me just bring this back a little bit further and see what we got here. So if we take this back, oh, I see what it did. Wow. Interesting. Okay, so what you have here, folks, is this. This is pretty intense. It has taken out the swing point going back from 2012. And you got volume when it took the swing point out, man. So $11.10, we had 18 million shares. It blows that away with 41 million. So you take $11, we take that bottom of FOA, it's 7. Normally I'd say take that money in a second, but what's going on here is that you could get a $17 stock here, man.
Every day it just seems to be creeping up. And,
yeah. And what you have is this. So watch what happens here. Now this is where it gets, it's a risk, folks. But what you have is this: when you take a swing point out like that on the monthly with volume, which this has, the larger position is that you take the high of the first high, which was in December. That high there was generated $11.10. Then all you do, fast down and dirty, you go down to the lows of November. Well, the high of the low is $4. So what I do is I take 4 to the 11, okay, get you $7, and you add $7 onto it, and it's pretty consistent on larger term charts, folks, on monthlies. So that gives you a price target of $17.10. What I would do is this. And this is an easy way of doing this, particularly because you don't mind giving up half the position because you're in such a winning position, right?
Yeah.
What you could do is put a stop in like at $10.92 or something, right? Don't put it at 11 because it's 11.10, maybe 10.84 or something under that swing, right?
Yeah.
For half the position, and leave it there, man. And it goes to 17 though, then you're going to want to be taking that juice off it, because what you're going to have. That's a full move. That's an A to B equals C to D. Do you know what I'm saying?
Yeah.
Cool, man.
Yeah. All right, thank you.
Okay, man. Have a great one. Have a safe one. And those biotechs, no doubt, have been, they continue to be strong. And we'll see whether someone else comes in and goes after them. Fundamentally, the equity doesn't have too much right now. They take in $15 million a quarter. They had taken in last year. I don't know why this year is different. This year they plan on taking like 84 million in for the whole year. But next year, 2016, since we're in 2015, they plan on taking in 163 million. So you're talking about big numbers. If we go over and we take a look at, we don't have Andy from Spokane on the phone anymore, but we'll bisect and dissect his equity that he wants to look at, because I'm sure there's a lot of folks that actually do want to look at this. And what it is that Apple. Apple, folks, what we had out here today, you had a dead cat bounce on Apple. It was up $1.49, had light volume, and that's after Apple had broken the swing point from December 16th and broke it with volume. Yesterday, we came down, and Apple came down with some big juice yesterday. We got into a low with the 65 million shares. It broke the swing low of December 16th, which had 60 million, and today you go up with 39 million. So the way that I would basically, what that is set up, well, first off, what it's set up is set up a monster ABC down. Hey, check this out, yeah. So you get A point of 119, your B is 106. So you got a 13-point A to B. Your C point is 114, so you get a 101. 101 is the A to B equals C to D on Apple. You're at 107.75 right now. So that's where this little baby, I expect, that's where that wants to run to. We get inside the XLE, I mean the XLF. The XLF, folks, that's what started falling apart yesterday. And the XLF, it came down with heavy juice, and of course the XLF for all the financials. Yesterday we got to a price point of $23. We did that with 46 million shares. Today you bounce on 29 million. That also is setting up a much larger move going down into this October 15th swing low. The October 15th swing low is something you absolutely want to wrap your head around. The reason being there is that lower level is, number one, where a few stocks have already taken out and taken it out with volume. And when I say a few stocks, one of the shockers, inside that would be Google. Google was down another $1.45 today. Google has just come down from 607 to 505 with volume. And Google's not stopping. Google couldn't even get back inside today the 518 price point. It got to 511, couldn't handle it, closed out at its lows. The swing point that we're talking about in Google is 1216, but this probably is a much larger ABC structure on the way down. If it is, your A point is 562, your B is 497. So you're talking about a 65-point A to B. Your C is 543. That's going to give you a 480 on Google, and that is one monster number. We go over to Amazon. We take a look at Amazon. Amazon also hasn't been able to get out of its way. What you have with Amazon, Amazon today was up $3. You had 2.6 million shares. That's after coming into a lower price yesterday with 3.5. So Amazon is also gunning. And Amazon itself, you talk about sticking out like a sore thumb. On the 24th of, so this is interesting. This is a different swing low. But on the 24th of October, you have that swing low out there that when Amazon had gapped down, and that swing low, the price point of that swing low is 284. The volume is 19 million. That's going to go after that swing low. So there's a lot of equities out here that want lower price. Okay, now let's talk about something that had juice in it today, but I suspect still not enough juice. And that, folks, is the IBB. Now, the IBB controls and runs the NASDAQ 100, well, not only just the NASDAQ 100, but really the NASDAQ in general. The IBB out here today, this is what the IBB did. We had come down off that high on December 23rd. We did that with huge volume, 3.6 million. Now, the IBB, folks, got all the way back up and above that area today with 1.5 million. So what it does do is it puts game in on that high. That high can actually get tested. So we'll see if that high is going to get tested tomorrow, because inside that IBB out here today, you did have these equities run. If you take a look at Biogen was up $18. Gilead, G-I-L-D, was up 1.83. Gilead kind of got out of its own way. That's pretty intense. Celgene was up $4. REGN, that was a big runner, I believe. That's a personnel. That was only up $10. So what you did have, Biogen was the one that had the action out here today. BIIG, that was up $18. You had some volume come in Biogen, too. We did 2.4 million shares. That's a good number. We had only come down on 2.6. So Biogen itself is saying that wants to go up and test that 361 area. We'll see how it reacts once you get up to that area. What I do expect you're going to see out here is still high volatility in all these equities. It's the currency moves, folks. It's all about the good old King dollar. Don't forget, folks, if you'd like to take advantage of my daily newsletter, it's a great opportunity right now. You can get the newsletter for a month. You get the Art of Timing the Trade absolutely free. It's an $88 value. And you also get to come to the webinar, which is on the 21st of January. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finished up 212, NASDAQ up 57, S&P's up 26. And one of our Tigers in the Tigers Den just gave me a heads up, but there's no doubt. And what it is that when we're going over this XLF, this setup, folks, is 3 black crows. And what 3 black crows specifically are is that you move lower just about the same amount of price, and you do that within a span 3, 4, 5, 6 days. This is a beauty. Now, it's a candlestick charting term. It's a bearish occurrence. And this particular case, when we're talking the XLF, what you do have is this. You're coming down, you have expanded volume. What you also have is that you have that October 15th swing low that's laying out there. That swing low is $21.55. Bottom line, we're up at $24.09 right now. Now, check this out. So this is what 3 black crows like to do. Most times, what you'll see is that you'll continue lower, and then what you will see is that you'll see a bounce. And I don't expect this to bounce, by the way, okay? You get a bounce most of the time, it's a month to 2 months later. And it goes all the way back and tests the highs of the 3 black crows once again. Now, what's so cool about that is this, is that when you get a phenomenon like that, most of the time what you end up doing and seeing is you'll go into a lower swing point. You've already had the dramatic move lower. You've done it exactly how you should do it, meaning wide price spread, accelerated volume. And that would be a heads up that, okay, you have the 3 black crows. Oh man, hold it though. Check this out. Oh, this is cool. Oh, this is going to be intense. This is what it is. So check this out. As I'm looking at this, the first 3 black crows off the high in December, that's a close call. But that's what the XLF also did. And then it doubled up again, got up to the high, gave it up, was up there 4 days, gave it up again. I suspect before you get a counter trend bounce, what you're going to see first is that you'll see the October 15th swing points get hit. Then you'll see the counter trend bounce. Now, what's cool and what's dynamite about that is the fact that trading opportunities on the way down are dramatic. You basically take the position off. Then what you do, in my case, I would wait for the counter trend bounce. I wouldn't be trading that counter trend bounce. The reason being is that in a market that wants to go south and has gone south as quick as we are going south, what you'll end up seeing is that all the surprises, okay, end up being to the downside. That's how most of these fast price moves work on the way down. Now, what we are going to see is this. This is going to be pretty wild watching how this shakes out. Investors poured more money into more than, okay, investors poured more money in the last 4 years into funds that track crude. Okay, investors poured the most money. Oh, there it is. Thank you. Okay, investors poured more money. Poured the most amount of money in 4 years into funds that track crude oil on speculation that prices are going to rebound from the 5-year low. So we got to look at this. The four biggest oil exchange products listed in the U.S. received a combined, listen to this number, this is sick, $1.23 billion in December. That's the most since May of 2010. And then I get the USO. Okay, we got to pull this up. This is just that just means people have lost a fortune, folks. Okay, I mean big time too. USO. I'm not sure. Let's see if we can find the funds they put them in. Whoa, baby, that's pretty bad. So if we take a look at the, if we take a look at the USO and we go back to December, oh man, yeah, they're in big losing positions. So December, folks, okay, you start out in December, it was $25. We end in December, and it was $19. Right now, the USO is trading out at $18.33, and guess what? It's a larger ABC structure on the way down. This is big problems. And now there's no doubt that this has been a one-way route. I mean, it was huge, too, because the USO, it broke its 2008 low. That low was $22.74. What happens is that with this USO is this. This has to get back inside, first off, $22.74 to go anywhere. And when you broke down there, man, you broke down with some decent volume. We did 482 million shares. Now, that was less than the swing point, but, you know, bottom line is that you're way away from the price range right now. So that little baby can definitely go a lot lower. And what you do have with that news just coming across the tape, that the most amount of money had been put in there. You know, John Logan and myself, we were talking about just oil in general. And, you know, bottom line is that I was also saying to John, you know, for the last few months, I was thinking that, hey, guess what? You know, when oil gets hit, I just might, you know, start accumulating some here. And then I realized that the last few days, GC, as I'm listening to other commentators and just as I'm listening to traders, the whole world thinks for some reason that oil is going to bounce like immediately. And it's like, you know what? The more that I kept hearing that, the more that I kept saying, okay, you really got to be careful because that's a contrarian type of view. What put the ice on the cake today was today. What they were pushing on CNBC today was that the last 5 times that oil has gone down this fast, within 6 months, oil was back up another 59%. That basically said it all to me. There's nothing that's 100% in the marketplace. And the marketplace in general, folks, okay, is always the same and always different. That's just kind of how it runs. Don't forget, at TFNN, folks, we do 10 hours of live programming every trading day. We start at 8 o'clock in the morning. Our man, Mr. John Logan, kicks us off. We go to 6 o'clock in the afternoon. You get all that programming right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com. Check that out. And if you'd like to take advantage, folks, of the Market Insights offer, check it out on the front page of TFNN. You have nothing to lose and everything to gain. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
This is TFNN.